last year, IQ doubled, and now the latest model, the O3, has an IQ of 150, let's say.
Yeah.
Okay, so now it's very, very, very smart.
Yeah.
Now, if it doubles again next year, and it has been doubling every year, it'll be at 300. It'll be smarter than any human that's ever existed in history.
Yeah.
And then the next year, it'll be 600. And the next year, it'll be 12. And then it's like, it's beyond human comprehension very fast.
Hey guys, welcome to Everyday Finance. Thought leaders like Saifedean Amos, author of The Bitcoin Standard, offer their opinions on the robustness of Bitcoin's decentralized protocol, while Raoul Pal, founder of Real Vision, keeps breaking down the changing crypto landscape by differentiating between sustainable innovations and market hype. Amos addressed the escalating concern that big Bitcoin holders like Michael Saylor or organizations like BlackRock may eventually acquire an excessive amount of control over the cryptocurrency in a recent interview with Anthony Pompliano. Amos underlined that Bitcoin is structurally immune to such threats due to its decentralized nature. The integrity of the protocol would remain unaffected even if one party owned a sizable amount of the supply, such as 10 million Bitcoin. He explained that shareholders or fund participants, who have the ability to withdraw or reallocate capital in the event that trust is betrayed, own the majority of these Bitcoin holdings, rather than corporations directly, in contrast to the interests of big holders like Saylor, trying to manipulate the network, for example, by implementing a hard fork to produce more Bitcoin, would only cause the value of current holdings to decline. The fact that BlackRock and MicroStrategy currently own roughly 5.3% of the entire Bitcoin supply highlights how widely distributed the asset is. The conclusion is straightforward. Despite the appearance of concentrated ownership, Bitcoin's strength is its protocol design, which preserves decentralization. Here is the latest talk.
Yeah, I got that one wrong because I was doing the wrong thing. I was still bearish in March of 2009. I'd made money through the whole crisis and then gave a whole lot back by just being negative too long.
Yeah. Well, it depends on your style. There is nothing wrong with being like investors on the short side could be like as we decided before, there's no such thing as bad markets. They're only wrong bets, right?
That's right. That's right.
So like if you can be bad on short and making money, that's all the more power with you. I wrote a book about how it's easier to swim with the tide, but not everybody has to swim with the tide.
No.
It's a matter of personal preference. So I'm not going to judge because I've been plenty wrong both throughout my career and recently to like be judgy of like, oh, you should have known better on that year, because that would come to bite me pretty badly.
Yeah, exactly. Hubris never wins. So listen, let's move on. And I want to hear your thoughts about this singularity, because, you have been not only a writer of science fiction, but a reader of science fiction. You've been thinking about a lot of these things, and now suddenly it all seems to be happening. Yeah. What is your mental framework for this right now? Because I don't think people get it yet, how big this is.
No, they don't. And paradoxically, even the most strong proponents of singularity, like people like Ray Kurzweil, they almost like moderate their speech because they cannot really spell out what are the real consequences of that, because you cannot easily spell it out because you'll be crazy. Now, when I was first introduced to the concept of singularity, it was almost 20 years ago. And since then, I've been thinking, like I read a couple of books, including by Ray Kurzweil and some other stuff around singularity, right? Maybe like 3 books or so on that subject, right? Back in the aughts, right? And I thought of it as a really cool idea. I definitely bought into the way of thinking, but bought in as like a speculative macro trader. Yeah, this might be a good trade, but it could go either way. Like, and it's always, this is one thing I also know, like it's, if you look at the asset performance in the past, you can derive a lot from looking at the graphs, but you never really feel the asset till you invested in it.
Yeah.
So like from that moment when I read this stuff, I started tracking this thing a little bit and thinking about this regularly. And so many people deny singularity. So many people, professionals in artificial intelligence, were saying like, oh, this is all bullshit. This is not going to happen. Trust me, trust me, trust me. I know all of this is all nonsense, right? Not in our time, in 200 years or whatever, right? I heard this so much. But what I've noticed, and this is what I've been steadily noticing, and those are not the words I'm saying now. This is the words I was saying 15 years ago. Of course, I could be lying now, but let's assume that I'm telling the truth, right? That the proponents of singularity as a theory were showing charts, graphs, math, calculations, while the opponents were just dismissing it offhand without any data.
Narrative only.
Yeah, and what I noticed is that data tracks the Ray Kurzweilian path of singularity. Everything has been tracking. And it's been tracking and continuing to track. And you could see like, okay, this is going a little slow, this is going a little faster. And then exactly as predicted, at some point things started to go vertical, and this is now. And I know, and now I'm kind of already, to me, the debate is over. People who say like singularity is not happening, I'm just laughing them off. People who start saying about like, well, yeah, AI can do this, but cannot do that. It'll never be able to do this. The thing. I'm no longer having this argument. I don't believe.
Even the stupid argument about what is AGI and what's not AGI, and they keep shifting the goalposts.
Exactly. And I'm no longer seriously engaging with people who think like AI cannot do something.
No.
Like, they cannot do that. AI cannot be caring, or AI cannot be creative, or AI cannot like write good poetry, or this or that. It's just, of course, people are entitled to their opinions, but this is no longer a matter of debate. I was willing to debate it a few years ago. I'm not willing to debate it anymore. I think it's just hilarious at this point. I just want to pat people on the head and say, oh, you're so cute. You think I cannot do this? Well, maybe like for the next 3 months, it won't be able to do that. Okay.
I mean, I've never seen a technology increase in its power and abilities at this pace ever. I mean, don't forget, it went from using IQ as a measure, which is not a great measure, but it's a measure. Last year, IQ doubled, and now the latest model, the O3, has an IQ of 150, let's say.
Yeah.
Okay, so now it's very, very, very smart.
Yeah.
Now, if it doubles again next year, and it has been doubling every year, it'll be at 300. It'll be smarter than any human that's ever existed in history.
Yeah.
And then the next year it'll be 600, and the next year it'll be 1200. And then it's like, it's beyond human comprehension. Very fast.
Strong, bullish indicators are currently being displayed by Bitcoin on a number of analytical fronts. Technical patterns, on-chain metrics, and derivatives market activity all suggest that the price could rise to $100,000. The daily chart's double bottom formation, which points to a breakout target close to $600, is one of the most noticeable indicators. In addition, after a steep increase, Bitcoin's short-term movement has formed a bull pennant, which is usually a continuation pattern that suggests further upside and suggests a potential surge towards $100,900. Longer-term indicators also reinforce the momentum. A falling wedge breakout on the 3-day chart suggests a possible $12,000 move higher. The optimism is supported by market activity, which shows strong buyer conviction as trading volumes are increasing in lockstep with price action. A dense concentration of short positions is visible around the $100,000 mark in the derivatives data from Binance's liquidation heat map, indicating that this level has emerged as a crucial liquidity zone. A series of short liquidations could accelerate Bitcoin's rise if it reaches this range. Bitcoin looks ready for a big breakout, which could solidify its next leg up in the market cycle, as moving averages turn bullish and profitability metrics rise. Now let's get back to the video.
I don't like discussing my specific positions, but I definitely have the availability to trade it for fun.
But you have the ability to, or you hold it yourself.
Yeah, so I have the ability, and I can express the pros and cons that I see on crypto as much as on gold or silver, right?
Yeah.
Like I can tell you the big picture of what I'm thinking about there. But what I'm saying is like being long dollar against something versus like China could be offset by, if you have the appropriate view, by being long hard assets.
And what about the commodity complex like copper, stuff like that, which is a trade that's on everybody's radar screen? And also, what about equities?
So for me, copper is an interesting trade because it's a trade like it's one of those trades that I'm fairly confident that if you go see through all the cycles, see 10 years forward, I think copper has much higher to go, because I don't think they will cancel electricity. And I don't know if they will have transmit all the electricity through microwaves beams yet 10 years from now, but the need for electricity is increasing, and I think they probably will need copper. In the next upswing of the cycle, copper could go probably higher in price. And meanwhile, but however, the counterflow is that if you do think of like China slowdown and global cycles cyclically, there could be some headwind to copper because it's an industrial metal, has a strong industrial component.
So you'd rather buy low, sell high?
I'd rather buy low and sell high, yes.
And equities, any strong views here or not really?
I am leaning negative on equities. I've been negative equities for a while now. Probably, I don't like being overly short stock market.
No,
it's a very
thing for me. We've all learned that lesson.
But you know what? However, I remember there was a convention, some kind of investor convention around 2018, I think, maybe like even before that big correction in 2018, right? And I remember I was giving some kind of presentation. I was in front of 100 people or whatever, 200 people, and asked them, hey, raise your hands if you think that within the next 5 years, you have better than 90% chance of buying stocks significantly cheaper than they are now. And almost every hand went up. And I was like, then why are you long? So what I feel like, on one hand, yes, in the very long run, stock market is always cheap. But what I don't know any exceptions to the rule that once stock market breaks out and makes a good run to the new at the money highs, like significant new at the money highs, then there will be a point in the future that you can buy it significantly cheaper. It's never like, so it goes through various, like if you just look from a chart perspective, it goes through various, like it breaks through barriers, it rallies 30% more. Many people think that it cannot rally again, but it rallies 30% more. But at some point, it still goes back to test the previous breakout points. And it just happens every single time. And one time it's COVID, another time it's tariffs, another time it's global financial crisis, another time it's September 11th. It's always something. So I feel like the odds are not so much that I feel like stock market has to go down tomorrow, but I feel like the odds are skewed towards I have felt that stock market being significantly lower at some point in the next 2 years. And every few years something happens. First of all, the rule is something happens. And this is what happened now. Now the whole tariff kerfuffle happens, right? That like a year ago, I wouldn't know what it is that is going to happen. But this is what happened now, and maybe this is it. Or maybe, but I think my intuition is that there's a good chance of seeing, like, this winter it was a strong view right now because there was you're still waiting for something to happen. Now that something happened, you're like, okay, now do I start buying the dips at 5,000 S&P? But maybe that's not really a dip yet. Now, when it goes to 3,200, that will be a dip. That's how I kind of look at stock. However, I don't want to be too short, because if you think about investor or money manager myself, the greatest opportunity lies not in timing to short stock market. The greatest opportunity for me historically lies in buying stock market in March 2009 and March 2020. And honestly, the reason I am successful is very much based on those things.
Even Stan Druckenmiller said the same. He's like, I've never really made money out of being short the market. But if I look back, I've basically made all of my money being long stocks. Long
stocks, long risk asset, like investing at the right times. Yeah. I mean, in some of the crises, sometimes it's a matter of luck, because every crisis develops in very own unpredictable ways. And I think even an earlier masterclass, I talked to like in 2001, I was positioned well for it. In 2007, I had a lot of trouble. I thought I was well positioned for it. Turned out I was not, because things didn't go exactly the way. And eventually, if all positions held, they would have been correct, but they were not correct for the beginning of GFC, right? In 2020, I was well positioned for that. Like when in 2022, when there was like the bond market collapse and the war in Europe, I was not necessarily well positioned for that. So with every new crisis, so this is a little bit of a Russian roulette, every crisis.
The way that central banks and institutional investors perceive Bitcoin is changing more quickly as a result of growing international tensions and economic instability. Geopolitical risk, particularly after Russia frozen $300 billion in its reserves following the conflict in Ukraine, has caused central banks to reevaluate dollar-denominated assets, according to Jacobs, head of thematics and active ETFs at BlackRock. Interest in alternative value stores like gold and, more recently, Bitcoin is growing as a result of this strategic shift. Countries are gradually diversifying their reserves as trust in U.S. Treasuries declines, and Bitcoin is starting to show itself as a viable contender for this new paradigm. Crucially, Bitcoin's standing as a digital gold and a safe haven asset is being strengthened by its recent decoupling from the U.S. equity markets. Bitcoin is gaining popularity as a sovereign-free, politically neutral asset that provides protection in a collapsing global order, while technology stocks struggle under regulatory scrutiny and market volatility. In addition to surviving the upheaval, Bitcoin is redefining its place in the global financial architecture as institutional investor demand rises and macro tailwinds get stronger. Remember, don't forget to subscribe for more videos like this, and thanks for watching.